What is the shooting star pattern? A shooting star is a type of candlestick pattern which forms when the price of the security opens, rises significantly, but then closes near the open price. The distance between the highest price of the day and the opening price should be more than twice as large as the shooting star's body. It occurs at the end of uptrend and signals bearish reversal. What does shooting star tells you? Shooting star signals a potential downside reversal and is most effective when it forms after 2 to 3 consecutive rising candles having higher highs. A shooting star opens and rises strongly during the trading session, showing the same buying pressure that is seen over the last trading sessions. At the end of the trading session, the sellers push the price down near the open. This shows that the buyers have lost control by the end of the day, and the sellers have taken over. The long upper shadow indicates that the buyers are losing position as the price drops back to the open. The candle after the shooting star gaps down and then moves lower on heavy volume. This candle helps in confirming the price reversal and indicates that the price will continue to fall. Trading example. Trade entry: before you enter a shooting star trade, you should confirm that the prior trend is an active bullish trend. Stop loss: you should always try to use a stop loss order when trading the shooting star candle pattern. Taking profits: the price target for this trade should be equal to the size of the shooting star pattern.